We are going live in 3, 2, and 1. We are live. Well, hello, everybody. I've got with me, how do I pronounce your name? I don't want to mispronounce it.
It's Nithin Eapen.
Okay, I have Nithin Eapen with me. And Nithin is a very smart and very seasoned professional investor. I guess you are with a fund called Arcadia Ventures?
Arcadia Crypto Ventures, yes.
Yeah, sorry, Arcadia Crypto Ventures. And you were telling me before you're doing some incredible things, but before we get started, do you want to maybe just introduce yourself, tell us a little about yourself, how you got into crypto, what Arcadia does, just, high level to start.
Sure. So currently I am the Chief Investment Officer for Arcadia Crypto Ventures. It's a private crypto fund, okay? Private fund in the sense we do not take outside money. We just invest our own money into liquid cryptos, and also we invest a lot into the ICOs, okay? Besides the investment, we are also lead consultants or advisors to multiple ICOs that are there in the market right now. We help them go through the whole process. We handhold the founders because the founders are not used to the whole ICO process. And before this, I was running a software company that I founded. And it was at that time that I learned about Bitcoin. I was going through the whole thing. I read the Satoshi paper. I understood this was how the future is going to be. And that's when I invested everything that I had into Bitcoin. And prior to that, I used to be a trader on Wall Street with UBS.
Oh, really? Oh, small world.
Why is that?
I spent some time at O'Connor.
Oh, really? At O'Connor? Chicago or at the...
A little bit in Chicago, sometime out in, this was like during the whole merger side.
So in Stanford.
Chicago, and then up in Stamford, Connecticut at the big floor and stuff like that.
At the trading floor. So I was there. I was a trader over there.
Oh, really? What years were you there for?
I was there from 2006 to 2009.
Oh, wow. Okay. I was there. I was young. I mean, by 2006, O'Connor was gone. So,
O'Connor. But all the guys that, coached me and all came from O'Connor, okay? The really, really smart guys came from O'Connor.
Oh, wow. So let me ask. So let's see.
The O'Connor guys are gods in the derivative space, you see?
Oh, gosh. Yeah, they invented it. So now what desk were you on?
I was on the derivatives desk, actually.
Okay. And did you have a particular...
I was on the equity exotic derivatives.
Interesting. So a guy I worked with, I didn't know if he was still there. I mean, I lost touch with him after 2002. Was a guy called Namuk Cho.
Oh, Namuk was heading the volatility desk when I just joined UBS, and then he left from there.
Yeah. Oh, wow. You don't know. Wow.
Namuk was the head of the volatility desk, the derivatives, the market making desk over there. Yep.
Yeah. When I was working under him, he was still he was on his way to become an MD. Jeez.
Oh, okay. Yeah. Okay.
I mean, 5 years. Wow, that's awesome. That's so cool.
He left to, I think, start his own fund or something like that. He started.
Yeah, most successful traders end up, doing
right.
Yeah. Everything. Oh, okay. Oh, wow. So you're a derivatives guy. You were at UBS, and now somehow you went from there. You learned a little bit about Bitcoin, and now you've got your own investment fund, or how did that all come together?
Yeah, so it was like this. So the person who asked me, they're a very wealthy family. He wanted me to look into Bitcoin, and he wanted me to explain the technicalities of it, and that's how I got into it. But when I went through the whole paper, it was like, oh my God, I was like, I missed the big rally because my close friends were very uber libertarian guys, and they were using Bitcoin from 2010, 2011. At that time, when they told me, I didn't look into it. I thought some weird, stupid.
Yeah, some nonsense. Yeah.
Stuff, and I let it go. So my friend at that time approached me because I'd left UBS, and he told me, we got to build an exchange. And I'm like, what? He's like, we got to build an exchange. I'm like, dude, it's costly. You need a lot of money. He's like, no, this is a different kind of exchange. I'm like, people can go to jail for it. He's like, no, this is okay. You can do anything over here. And I didn't do it. And the first 3 guys who started exchanges actually went to jail, though. All 3 of them went to jail, though. So, this was what I was explaining to him. Starting an exchange is great, but if people lose money, they're going to go to the attorney general or something like that, and they're going to come after you after that. Okay? So an exchanges, you see, the UBSs and all, They can do that because they have a huge staff behind them to take care of the infrastructure, IT, that nobody's losing money. There's a lot of work going on behind the scenes in settlements and clearing and reconciliation, you see? Mm-hmm. Just the trading. The trading is just one piece. The front end is just, the execution is the easiest part. But the back end stuff, if somebody's not taking care of it, people are going to lose money, you see, period.
Yeah. Wow. So, okay, so then you decided you guys started a crypto. Did you guys end up starting the crypto exchange or?
Oh, no. We did not do the exchange. What I'm saying is, then eventually when this friend of mine, he reached out to me to do this, he asked me some technical questions. It was part of another business that we had. And he reached out to me because he was buying it because his friend told him to buy it. So he just kept buying it. It was going up. And he was like, you got to explain to me, why is this going up? I don't get it.
No idea, right?
So his friend told him to go all in at that time in 2012, 2013. He said, there's no way I'm going to go all in. So he put a little bit in it and he was just dabbling over there. If he had gone all in, it would have been, he had millions with them. It would have been a multi-billion-dollar portfolio at this time.
Yeah. Now, was this prior to Mt. Gox or after?
This was prior to Mt. Gox. This is all prior to Mt. Gox, okay? And anyway, so I got in after the Mt. Gox thing, okay? I was watching it at that time, but I didn't know what Bitcoin is. I was watching the prices. I'm interested always by asset prices.
Nice.
I was always watching prices, but I didn't know. I thought this whole thing was a fad. I really thought this was just, play money and stuff like that. But the day I really read the Satoshi paper, it took me a month to really figure it out. Though. Mm-hmm. That was that moment. It hit me like, this is the biggest thing that ever happened in human history. I got it. I got it. At that point, I'm like, why didn't I read it before? And I just went, I told my partner, we got to put all our money into it, period. I convinced my...
Oh, wow.
We broke our 401ks and we put it in, we paid the penalties and put it into Bitcoin, basically.
Wow. Well, good for you. I mean,
it was not, believe me, it's not a lot of money. It's just that the returns were so high. It's not like we had a lot of money, but the returns were very good. But I did go all in. I put everything into it, you see. That was the difference.
Wow. And even at 2013, I mean...
I did it way later. You could have done it even in 2016 and you would have done phenomenally well, you see?
Yeah, I mean, our portfolio did very well in 2017. So we're not...
Right. You just have to come in 2016. Even if you missed 2013, 14, 15, it's all okay because you still were getting many, many multiples, you see?
Yeah. Wow.
Yeah.
Okay, so you got into this, and now you have Arcadia Ventures. So is this some sort of a...
Right now we have Arcadia Ventures, which is a fund. We are primarily investors. Okay, we invest in crypto, but besides investing in the liquid crypto market, we are also advisors and consultants to a lot of new ICOs, new businesses going the ICO model, and so we have a big stake in many of them that are going there, which kind of propels us. If they do very well, we are going to do phenomenally well, you see?
And as advisors, what do you do? Do you help, like, let's say I've got an ICO. If I've got a plan or I've got a business and I want to do this token thing, do you help me get on the exchange?
Sure. So what we do is we sit with you. We understand your business. First thing is obviously understanding your business. And we sit with you the next thing is, are you trying to raise money? Okay, you have a business or you don't have you have an idea. The question is, are you trying to raise money? So if you're trying to raise money, you can go the traditional VC route, you can reach out to family and friends, or you can do an ICO and reach out to the world and see how many people all over the world would like your idea, right? So then going through all the details, the budgets, the product, how can we, blockchain it, put it on the blockchain? How do we make that story so that people all over the world like you, like the founder, like the idea. And then, we take through the steps of we bring in legal. We have legal partners because we are not a legal, we're not a law firm. So we bring in legal, we bring in marketeers. Take us as a general contractor of a house. You're building a house, you call us, we know all these guys, we give you multiple options. You can go for the attorney guys who are charging 500,000 to 100,000, okay? Domiciled in US, domiciled in Europe, domiciled in Singapore. So we are like the general contractor. We are bringing in the plumber, the electrician, everybody together. We are making sure that the ICO goes well. We are doing a project management at that point.
Nice.
All right. So, since we have been in the space for a long time, we know a lot of people. We don't raise money. We are not a broker dealer. We don't raise money. We never ask anybody for money. That's totally up to the founder to reach out to all these people and ask for money. Those are things that we do not do. We kind of structure the token model because, see, a lot of the mistakes that happen are people are thinking it's very simple. They make a token model, and majority of these guys never bought a token before. So they are trying to make a model on a token that they have never bought and they expect other people to buy. So that is where our expertise comes in. We buy at least close to between 2 and 4 ICOs a week. We are investing 2 to 4 ICOs a week. Okay. So if the structure is not good, we're not going to invest. And we're just looking at, are the retail investors going to invest after this? Okay. And a good chunk of the founders, they don't buy ICOs and they are structuring ICOs. So I think people are going to react to that, you see?
You got to eat your own cooking, that's for sure.
Right, exactly. So that is where, we bring in all this knowledge. Sometimes they ask us, so what do you do? Because some of the white papers, we have written some of the white papers, okay? Many of the white papers out there, we have written them. But more than that, we tell the founder to write it and we review it with them because, see, the founder has to sell his story end of the day. There's no point in me writing it. The founder has to reach out to the investors all over the world, telling them to believe in him and his story. If I write that story, one, it won't be correct. If that was the case, I could have done my own ICO, right?
Exactly, right? And then there's always the X factor, right? The emotional aspect of the sale. And you can't, it's the term is either authenticity or whatever.
Right, exactly. It is the authenticity, is that emotion, the passion behind it of the founder. That has to be there. And that can never come from us. We can write a white paper easily, okay? I can write a white paper, I can write a deck. I've written multiple decks and white papers, but it has to come from the founder because eventually he's going to go with this to the investors or people who are putting the money, right?
Yeah.
So that's where we want him to be, okay? And then, the idea is to hook him up with the PR, with content writers, with marketing. Set up a roadshow for him, a roadshow schedule, in US, in Europe, Asia. And this market is changing so much, Right now, there's no more utility tokens as far as SEC is concerned. So we have to quickly adapt and make security tokens for the next set of guys.
Well, that's been very interesting that you bring that up because it's actually very opportune that we're having this conversation because we have in our back of our pocket, we've been implementing a blockchain for an interesting thing. We've built up a fairly strong community, and we've kind of I don't want to say halted it, but with this whole switch over from utility to security token and stuff like that, we were going to be hard charging, we thought going into April and May, and coming in around June when we saw the, February, June, we saw these things shifted. We've actually adjusted our timelines because the last thing I want to do is go to jail or do something.
No. So that is where we come in. You see, we know what's happening in the market. We know what regulation is. We are making sure that all our clients are very compliant. Okay. Okay. That's the first thing. You want to do it in a very compliant manner. See, the other options you can say, you know what? I'm not raising money from anybody in the US. I'm going outside to Asia and Europe and raise. So then you don't.
Yeah, I've heard about that. Like they start blacklisting countries and stuff like that.
Right, exactly.
In like Monaco or
Right, exactly. So that is one way of doing a raise. But then the whole U.S. market, without the U.S. market, you're missing a huge community. The U.S. market is the biggest community, if you really. Okay. People say that it's in Asia the trading is happening. It's in China, it's in Hong Kong, it's in Korea, it's in Japan. But all of that was dwarfed by the US community, end of the day, you see? That's the reality of things. And you can raise money from Korea alone nowadays. Korea is just pumping money into ICOs. I agree to that. It's like 40% of the adult population who are working right now have accounts on exchanges and are trading Bitcoin or cryptos on a regular basis. That's what the number is. So they banned this crypto trading in Korea, and the statistic and the government, they saw that the numbers, people, 40% of the adult working population doing it, and they signed some signatures. Which government would want to go against that? All these guys they have an election coming in 6 or 8.
Yeah, you vote that office.
No, see, that's the whole thing. It's the power of the people. It's like New York City trying to take out Uber. Okay, Once everybody is used to using Uber, and then if the mayor comes and says, you know what, we're going to throw Uber out, well, good luck, you know.
Oh yeah, yeah. There's going to be riots. Jeez.
So
No.
New York has a rule, for example, saying that you cannot sublet a room in your house. And Airbnb came. So some of the investors who didn't invest in Airbnb was because, you know, that's not legal. Well, if you have 4 million people in New York City subletting their houses, what are you going to do? Put 4 million of them in jail? See, once the network effects the network effect or those acquisition cross a particular point, it's not, that is the rule at that point. You know, you can't say this is the rule.
No, definitely.
You're going to find 4 million people and put them into jail?
Yeah, no, well, you know, you can make arguments that things like that they've tried, but no, definitely. It is definitely.
They've tried things like that. See, they made prohibition a rule. They changed the constitution, made prohibition a rule. The whole of America was drinking more than ever, percentage-wise, and they had to change the whole constitution again and say, well, actually, drinking is okay.
Yeah. No, you're right.
It's so costly. Like the whole machinery that your tax money and all is going to fight people who are drinking. Right?
Well, you can make that argument also with the war on drugs, right? I mean, that's
exactly. No, the war on drugs, the same thing is going to happen on the war on drugs. Like now 30 states have made it, you know, medically legal, and at least 4 or 5 states are recreationally legal. You know, how long is the federal government going to fight this, you know, against marijuana? It's only a matter of time because it becomes, you know, legal all across US. It's just a matter of time.
Cool. Well, let's hop in. I think we're getting a little off topic, and
Sure.
Philosophy is great, but you know,
I get it.
You know, let's hop in on, you know, you're the expert, you're structuring deals, you understand this world, you're getting, you know, ideation to fundraising to listing on the exchanges, you know, all that sort of jazz. So you were telling me you've got like this new ICO deal that you've put together or some new structure, you know, because of what's changed or it's revolutionary. You want to maybe talk a little bit about that, or you know, educate me in terms of, you know, how the market's evolving?
Sure. So since the market has become like this, a lot of people are scared, like, you know, if they do a utility token, are they going to jail? So, well, the answer is you cannot raise money from US investors saying that it's not a security, basically, because now you're at risk. Now, what is defining a security? So it all boils down to how do you define a security? So, you know, you can take it to court. Even if they come after you, can say that, okay, my coin was like, take Chuck E. Cheese coin. The coin is only can be used in an arcade in Chuck E. Cheese, right? Same way, if I make a Facebook coin that can be only used for giving likes and putting comments on Facebook, you know, is that a utility? Yes, it is a utility, okay? So things like that, and people are trading it at different values. So the question is, what is a utility? So you'll have to find that. So instead of that, you can register it as a security. Why not register in the US as a security if you're raising money from US investors? So you register it as a security, and maybe you don't give a dividend. Maybe you give a dividend, you know, or royalties on your tokens based on what your company is making in the whole process. See, the idea is you're raising money to do something, and you're giving back to your investors in tokens so that they can use in your company or your products or your platform, right? It brings in this utility value. You can decide to give them a dividend or on the money that as a company that you're making, right? So when we are structuring it right now, we are structuring it as a security token for people who want to raise it from the US so that it's very compliant. It's Reg D, it's registered with, and it's registered with the SEC. And then we can decide how to make the utility token work within your platform.
Okay, so you're still running a utility token, but you register it as a security for SEC rules so that you can access US investment.
That's okay, right? Because you have registered it. So you're going to, but you can, now when you're registering it, you have to follow a lot of rules. Like if you're a Reg D, you can only take in money or investment from people who are accredited investors.
Okay, so, and you usually do Reg D?
Reg D is much easier. It's easier to do a Reg D. And you are constrained though. You cannot raise money from people who want to send you $1,000. See, the idea of a Bitcoin or an Ethereum was people with $10 or $100 or $1,000 could send you money and be a part of this whole crowd. See, end of the day, what is an ICO? It's just crowdsourcing or crowdfunding on steroids, if you ask me. The whole world is involved and they're getting something back. Earlier, when you were doing crowdsourcing or crowdfunding, you would get a t-shirt back, which you really had no, you know, It was a one-time t-shirt, right?
Exactly.
Something like that. So instead of that, now you're getting these tokens which you can use on that network, either for discounts to buy stuff or to, if it's a software, use it over in that software, use it for payment, or, if there is a market for it. So this is, end of the day, this is crowdfunding on steroids, if you ask me. Now that crowdfunding.
Now, how does that work? This is interesting because we were looking at this, and what we found was even if you do a utility token, the way tax regulation works is with the utility token, it comes up as ordinary income. So then as a business, you're paying, 30 or 40% on your fundraise, which, we looked at that and said, oh my gosh, that's awful. Like the last thing any investor wants or, is to, give you money and have 40% of it just go back to the tax man. I mean, that's awful.
Why don't you register the place that you're doing the token from in Cayman Islands then? That's a tax.
So that's where they move it there.
Okay. And then whenever you need money over here to do stuff, get it in. Okay. Bring the money in it's an expense at that point. See, you raise the money for expenses. End of the day, you have expenses, right? As a company.
Correct.
Okay. So that's one way of doing it. So there are different ways to skin this cat. Okay. Keep that in mind.
Interesting.
I'm suggesting one way that people are doing it.
Wow. Yeah, there's a lot of what we've learned as we've looked at this is there's a lot of pitfalls, and if you don't know
them, you're going to pay a heavy price, because let's say you raise money and you had to pay 40% in taxes. There goes half your money, right?
Yeah, that's awful. Yeah, that was definitely an eye opener. We're like, oh.
Right. Yeah, exactly. So since we have seen it multiple number of times, we know. Okay, so having a good advisor, that's what a good advisor or a good consultant does. You see. They've seen it multiple times. It's like having a coach. Does really Michael Jordan need a coach? Was Phil a better player than Michael Jordan? No. But somebody like that will tell you when you're trying to make the same mistake over and over again.
Yeah, no, you're right. You're right about that.
So it's, sometimes, okay.
Yeah, no, sorry. So going back, and again, so going back to this ICO structure. So now the new structure that you're doing is you're registering as a security, but you're still offering, it is still a utility token. But because you register under Reg D, you now are available for US investors, assuming they fall under the accredited investor category on that front. Now, the downside, though, is for all the people out there who do not fall under accredited investors, they're kind of just out of luck. And they just have to wait until the exchange gets listed before they can buy.
Yeah, it gets to an exchange. See, that is the bad part of the whole deal. Okay, it's for the U.S. small investor. He is being pushed out because of this whole thing. So they need regulation to protect the small investor. But in reality, what's happening is the small investor. See, what in the whole Bitcoin Ethereum boom that happened, it was the small investor who made money. Google, let's say Google is coming with its first seed investment. They only take money from a Sequoia or a KPCB. You or me out here, we don't get a chance to buy Google at 1 cent. We get to buy Google when it comes on an exchange at $40, right? Correct. Which puts us at a big disadvantage. See, the beauty of an ICO was that even a small investor with $1,000 could make a bet on one of the futuristic technologies. And it's true that KPCB or Sequoia could do it with $1 million, but you could do it with your 1,000. In the case of Google, you couldn't do it. You could only do your 1,000 when it came to an exchange at $40, when all the other guys cashed out.
Yeah, no, exactly.
Right? So that piece is being taken away in the US when you're going through the SEC route. And they're saying it's to protect the small investor, but who are you protecting? People want to make that bet for his $1,000. Does he want to wait for Google to come on an exchange or try to buy Google at 1 cent?
Yeah.
And it might go bad, as VCs put their money in, 90 to 95% of their investment go to zero. Same thing will happen for regular investors. And that's a choice that they should make, you see. So ICOs gave an option for a lot of people to get in, but now with the US laws, that's not available. But in the other countries, they can still do it, okay? When you're raising money for your project to bring in money from, there might be somebody who likes your crazy project and he wants to send you $1,000. And there could be multiple of them across the world. If you reach out, your message could reach out to them, your project can get funded. Otherwise, your option was to go to Sequoia or KPCB and they would say, this is not going to work.
Yeah.
You had a few guys with a lot of money who could control it.
Mm-hmm.
Now you have a chance. It might still fail. Maybe Sequoia was right. Your project could be a failure.
Yeah.
You get a chance to try it out, and the people who are supporting you, they can send you money to support you to try that out.
Yeah, no, that's definitely quite something. No, that's pretty interesting. So, moving on. So, in
Sure.
terms of structuring and stuff like that, so you've got this new type of deal that you're putting on. Do you want to maybe
Yes.
expand more upon that, or educate us in terms of
On
how?
the structure, see, all the structures are different. Okay, it's not one single structure. Okay,
Mhm.
it depends on the client. It depends on the product. There's so many different structures because it's not like a one size fits all kind of thing. Okay, just like SEC doing. There's one Reg D, there's one Reg A, and there's a regular race, and there's an IPO. No, this one is it's a lot more tailored at this point. Okay, your domicile could be different. Where you're issuing the tokens could be different for different customers. You see, it could be in Singapore, it could be in Switzerland, and over there they might do it through a foundation. When you're doing it through a foundation, you need somebody who's a Swiss or a Singaporean citizen as who's running the foundation. So there are
Oh,
costs that are going to come as part of this. Okay, just to set it up. The setup takes. It's not like before where it was much easier.
and what's like a setup cost? Like, is this like $100,000 to set something up
Now
like?
you have to plan when you plan for an ICO. Your setup cost eventually is going to take somewhere between 500,000 to 1.5 million. I would say.
Oh, wow.
That's what your cost is going to end up being. Now, if you know all these things and can do it yourself, maybe you can do it for cheap, but then your effort is going to something else rather
Well, you're
than
not going to actually build the project. You don't have time to build the project.
exactly. That's why you hire people from outside to do it, you see?
Wow. So
So
now it creates it where you can't even get away with raising $2 million or $3 million because if you're going to spend $1.5 million or $1 million in overhead, you got to raise like 10 to $15 million just to
but
make.
think of it this way, okay? How about the, hold on 1 second. Give me 1 second, okay?
Oh, not a problem.
Just 1 second. Okay.
We'll pause this. Okay, let's continue. Go ahead.
Okay. So where were we about? We were about
We
talking.
were about fundraising stuff
Sure.
now
The
because new
cost of
regulatory.
fundraising, right?
Yeah.
So the cost is so think about it this way, okay? Earlier, you didn't have a cost, but you had the cost of flying to these VCs and the meeting times. And usually by the time people raise money, to take them close to 2 years when they would raise 1 million or two for the
Mhm.
seed or the Series A and stuff like that, okay? And the VCs would make you go back so much due diligence and all this stuff.
Yeah, 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 yeah.
Right. And so there's no real upfront cost, but there's your time. Your time is a lot of money, actually, okay?
Mhm.
So right now, because this is like as I told you, this is funding on steroids. The whole ICO could be possibly done within 3 to 4 months sometimes. Okay, you will
Wow.
know whether you're a failure or a success by that time. You
Hmm.
have a lawyer cost, so but you're not paying it all up front. Okay, you have your advisory cost, you have your PR, marketing, all those costs, but it's not paid all up front. But I'm telling by the time the ICO is over, this would be your cost. And in
Yeah.
between, the fundraising starts. So some of it could be used from the fundraising that has started, okay? And if
Mm.
the process is over within 4 months or 6 months, it's way better than waiting for 2 years to know that you're a failure, right?
Yeah.
In
Fail fast.
the time that it saves you. And so let's assume that you spend 300 or 400 and you could only raise 600. Well, it's bad, but at least you know that people don't like your project. You incur such a loss, okay? Now you know that people didn't agree with you, or you raise a little less, and if you raise 10 million or 8 million or 15 million or 20 million, this amount that you spent was worth it, right? Because what was the other way of getting this money? This money was locked up with very wealthy investors who are not investing it anywhere. Now this has come into the market to build new products. And let's assume even these products are a failure, it's okay. The money has come into the market and
Mhm.
something is happening. And out of that, maybe a Google or a Facebook on the blockchain is going to come up. You see, some of
Yeah.
those companies can come up.
Interesting. So now let me ask a question. So, what if I think what's happening is, a lot of companies, maybe an existing business sees, some new company come up with an ICO, which is literally just a white paper. And, all of a sudden the thing's got tokens everywhere and it's got a market cap of, $500 million or something insane, right?
Mhm.
So now I'm that existing business and I'm saying, wow, why can't I just do that? You know, I don't know if this becomes like either a liquidity event, not that it's a liquidity, but there is value for a company
Yes.
having, you know, tokens listed on an exchange or something like that. So maybe they don't even need to raise money as much as they would like to, you know, achieve some liquidity or become traded, because if you're traded and your token gets appreciation, that also becomes a form of currency that you can use for, you know, future on fundraising or things like
Right.
that. So,
Mhm.
you know, do you work with those sorts of companies, or, you know, is that a little out of the box, or?
We are getting there because all the securitization or tokenization of securities is coming. Okay, there are only very few companies who have done that, but
Mhm.
most likely this year and next year, there's an expectation that this market is going to become a $10 trillion market, the
Mm.
tokenization of securities. Okay. Hey, Charles, can you give me one more second? Is that okay?
Not a problem.
Let me just respond to this. Okay.
Okay.
Right, right. So as we were saying, so imagine, so think about it as a limited partnership, okay? So let's say you and me together, we had a 50-50 partnership into a dental practice, okay? All right?
Mhm.
So earlier, let's say I wanted to get out, there would be nobody, unless you were willing to buy my piece, nobody was willing to buy that, okay? Nobody wanted to take that risk in a small company. So even if I was selling, I would not. So let's say even if the whole business was valued at $1 million and I was supposed to get 500,000, if somebody was there willing to buy it, at best I would get was 300. I'd have to take a huge discount. Okay.
Exactly.
So imagine my whole piece. We could tokenize it, and in small chunks, people were willing to put $1,000 or $100 into it, buying these tokens, which are getting some royalty from the company, for example. And it could be the local guys in our area who come to the dental office and they like this place and they're like, okay, you know, I don't mind putting $10,000. I don't want to put 100,000 or 200,000. So you can tokenize that limited partnership. So this is a possible future, you see, the whole tokenization of equity. Or think of Apple stock, for example. It's a little far-fetched, but Apple is traded in US, right? So a guy in Tanzania cannot buy Apple, even though he wanted to, because it's on the New York Stock Exchange. He cannot get to a broker here because of all the laws. Imagine there's a token that's built on top of Apple, like a smart contract. It trades accordingly with Apple. So if this token can cross borders at this point, because there's no money transfer involved in it. See, the main reason why somebody can't buy Apple is they have to send US dollars to buy Apple on an exchange over here. It's going to be hard, right? What if they could do it with Bitcoin or Ethereum onto some token that was tracking Apple? It's a way to get involved in this huge market, right? A lot of
Yeah.
people would like to, you know, let's say you're in Venezuela or Zimbabwe. Would you want to invest in your own currency in your own market, or would you prefer investing in the US market or the US real estate?
Yeah, of course. Yeah, definitely.
And what if, but nobody has the money over there to invest in even the smallest property here. But if they could invest their money in a piece of the property, and when the property goes up, and if it's sold, they get back those returns, they would be very happy about it, right?
Yeah.
So this is opening up this whole market that way. The whole market is being opened up in the sense more people, smaller people, you know, the small common man across the globe is able to participate in it. Okay.
Mhm.
And that I think is a see the fact that you can transfer value over the internet. See, the whole thing, what Bitcoin or the cryptocurrency has done is you can transfer value over the internet. So the idea of an internet came was to democratize the whole space, right? To bring information to all of us in a free flowing manner. But what happened is a few companies like the Google and the Facebook, they are holding all the data.
Mm.
All right. And they can choose to censor people. All right. It's not just sometimes about money alone. So Bitcoin is one application where money, the government is printing money. So people who didn't like that, they want to go for Bitcoin. Great. There's the other piece, like these cartels of companies, because they hold all the information, they can censor you. So take a simple example. Most of the Silicon Valley companies are based out of California. So they're very left wing. So the right wingers are getting censored over there.
Mm-hmm.
Those guys are funding, a lot of them are funding the open projects out there because they're not getting censored, because you can't censor somebody on these blockchain networks.
Mm.
All right. So the fact that you can transfer value, see, earlier, if I had a picture, like I had a JPEG photo with me, I could do Control-C, Control-V and send it to 10 people. Now I have the picture, you have the picture, right? But
Mm-hmm.
Bitcoin thing, what has happened is I can send my picture to you and the picture will get erased from my side when I send it to you. And that is done without a middleman who's not charging rent. So all these things, the distribution mechanism, the consensus mechanism, all this together is paving way for this great technological boom that's happening and which has never happened before. Like the borders, like which were meant for not for people to come in or for us to leave from a country, we can penetrate through these borders because of the fact that these cryptocurrencies go on these networks and nobody can stop that. So this by itself is a huge revolution, and every project out there. So for example, I'll tell you a big example right now. Take virtue.poker. We are not an advisor in that, but the guy is decentralizing playing poker. Mm-hmm. So 2011, poker was shut down in US.
Oh yeah, I remember online poker.
Friday. So Black Friday happened. There were two things that happened. One, US shut down poker. US is the biggest poker market in the world, so it's been shut down that we can't play poker online. The second thing is the company who was doing it, like Full Tilt, they took money and the owners were taking money out of that without the players knowing, which really did not belong to them. Okay.
Oh, they were kind of just basically skimming off the top of it.
They were skimming off the top. Okay. Now, the reason why this was possible is it is a centralized one server thing, right? There's one server, one company. They decide to do it and nobody can check it because you can't check whether they took the money or not. There's no way you could check the records, right? Mm-hmm. US could shut it down because they just had to shut down the server or put the guys in jail. Like Uber, if you want to shut down Uber, you just have to put the CEO of Uber in jail and take down the servers. Simple. But you can't do that with a Bitcoin. Same way for the guy who is building a decentralized poker. If the poker that we play is on your machine and my machine, and all of us are playing on our machines, and there is no central server to take it down, then we can play poker.
Yeah.
It's not a central, and not only that, the other piece is, so I'm transferring my money, it comes directly to you. It stays in a smart contract. It does not go to the Full Tilt company that can skim off of it anymore. The moment we finish playing poker, my money comes back to me and your money comes back to you. Done. It was a smart contract. It was in a program. It was not with a company. This program has rules, like if 250 belongs to me, it comes to me. 750 belongs to you, it comes to you. Maybe they have the rate charges which will go, for some kind of justice system and things like that. So it's an unbelievable change that can happen. So like take an example of we play lotteries, right? Most people play lotteries. Of the dollar that you put in, only 50 cents come to you as prize money. The rest of the 50 goes to some kind of state tax. They say they use it for building schools or whatever, but how much of that comes to roads and schools? It's only a portion of that, right? Most of it goes to somebody's salaries. So, but I'm playing the lottery game, so I'm playing a game of chance. Me and you, we put $1, so that means I can only win $1 if there's only two of us. If there are 10 of us, I can only win $5. The rest of the 5 already went to them. And with it, and the 5 that I win, I still have to pay taxes also. Imagine there's a decentralized lottery game that can be played, which is not on a single server, and all of us can play it. So if I'm sending $1, that means close to 95 cents can come back as prize money. It's better.
Yeah, there's an application for that. I was talking to a guy. They're doing that for charities too.
Yeah.
Right. The thing about I forget if it was like the Red Cross or something.
Yeah.
Where like millions of dollars were donated for Haiti, but they only spent they only built 2 houses because all the red tape or whatever got it
exactly off. Same thing. So same thing. Like you want to send money to a charity, okay? So this is the biggest application if you ask me. So let's assume that I want to send $1 to somebody in Somalia. I'm just taking an example, okay? This is not like Somalia. So $1 in Somalia could be food for maybe 20 or 30 people. Okay, $1 is possibly, it's a lot of money when you convert it to the local Somali, whatever the currency over there is, okay? But if you want to send $1 or $1,000 through by Western Union, it costs me $20, whether if I'm sending 1 or 1,000. And Western Union, so this guy who gets it, he has to reach there to get this money, okay? His Western Union might be 100 kilometers away or 100 miles away from where he is staying in some remote village. And he can only do it only on Monday to Friday. At this point, I can send it on Saturday. He can get it at that very moment. And I can send micro payments. I can send him $1. I can send him 50 cents. I don't have that charge associated with it.
Yeah.
See, I might not have $1,000 to spend, but my charity could be $1. And that $1 could be very big for some guy in some rural village in maybe India, China, or Africa. And that's not possible right now.
Yeah.
So see, that's what I said. On charity side, on the anything that has a central party that is involved and that is rent seeking, we can break that. Whether it's journalism, whether it's, it can be in any field. Coming, you see. I don't know what all will happen, but I can only speculate on some of them. It's like saying, when the iPhone came or the smartphone came, you didn't know that you would use it to hail a cab, right? You didn't know that the biggest use would be for Uber, right? You didn't know that a $60 billion company would come out of the smartphone.
Yeah.
There's no way we know all the things that will come. Like, I could never imagine a CryptoKitties would take down the Ethereum network. And people were buying virtual kittens for $150,000 on November 20th.
Yeah, my daughter actually has started to trade a few kitties, and she's made a couple $100,
Right. But there were some of those kitties sold for $150,000.
Oh yeah, no, they went for some good money.
When you look at it, see, it might sound weird. It might sound that, oh man, all these guys are stupid. But I really look at the data points. Okay, I went and met these people. I wanted to see why they were doing it. So there is a reason for it. Okay. So earlier, let's assume we were playing CryptoKitties. Okay. Some guy in a dorm room set up the CryptoKitties. You started playing, I started playing. We bred this virtual kitties or cats. We love our cats. Now this guy was not making any money, and one day he decided, you know what? I got a job at Google. Now I've got to switch off my server. Both our kitties are dead, right? Maybe we are very depressed, because we lived our life on the virtual kitties.
Yeah.
Because it's on the blockchain, your kitties will never die. And
yeah. That's funny. That reminds me. Have you ever heard the the Ethereum founder story of World of Warcraft? And same thing, right? Blizzard Entertainment changed. Like, he had spent hundreds of hours, thousands of hours creating his. I think it was like his character. Maybe it was like a wizard character.
Wizard character, right? And
they changed the spell, and all that time was lost. And that's
exactly.
I need to move my, I need my World of Warcraft on the blockchain. So
simple,
if we're something, we can start like a different world on the same character and continue.
So this is like the whole thing, right? So there are a group of people who are gamers. Like, I don't play games, so I don't understand what their problem is in life. But that doesn't mean they don't have a problem.
Yeah.
There's a market for the guys who can solve their problem, because there are a lot of gamers out there. See, it might look crazy for a guy who's not a gamer. Why are people spending money on CryptoKitties?
But yeah, no, they are, and it's valuable to them. It's actually interesting with CryptoKitties. There is now, I was looking at that, and now they have like this whole app ecosystem where, like, I think someone's writing like a CryptoKitty roller coaster. So
really?
It's like a separate app, but you can take your kitty. And because it's on the blockchain, your kitty can go on this app, and now your kitty gets to go to a theme park. And
okay.
Like, the application at this point, we're still in the infancy, so it's not that developed. But it really goes down into the fact that you have your user data of your kitty, and then when you rides that roller coaster, some sort of transformation occurs. Maybe it gets wet, or maybe its eyes get wider, or something like that. And now that's on the blockchain, and your kitties evolve. So then if someone else creates another set of attributes or another application around these cats, you can keep building upon your cat, and, it's immutable, right? So it's yours instead of yours. Well, you think about it, right? The classic thing, so we're in media. The classic problem we have, and this is the same social media problem, it's another application, is, we have 50,000 or 60,000 people in this Facebook group, and we have, 500,000 followers on this Facebook page. And then we want to do something on Instagram, but we don't have any followers on Instagram, and we can't move our people from Facebook over to Instagram. So we're starting all over. Or, our YouTube channel has, what we have over there. The YouTube people don't talk to this YouTube channel, or can't talk to the Facebook channel. It's all, these silos exist, and you're
No,
definitely
no,
right.
but it's the first time I'm thinking that way. It looks like it's true. So there is a huge opportunity over there at this point, you see. So
Yeah.
you told me this. You told me this problem because now when some guy comes with the idea, I can wait for this. You see,
Ah.
I'm going to come up with this idea. It means that it is a problem within journalism or people who have brands and stuff like that, right? They have a brand at one place, but like social media things are spawning up every day, right? Can you shift your whole piece from here to there?
No, we can't. I mean, we're stuck. I mean, Facebook's one of those things where, we have a very strong presence on Facebook.
Okay.
Like Facebook because it's, it's done some good things, but they've caused some problems. Being that I specialize more on the cryptocurrency side. When
Okay.
they banned cryptocurrency, there was a blanket ban, no more cryptocurrency ads. Our posts, our content, this is never going to be official, but our suspicion is the reach on all of our stuff has just gradually dropped. Specifically,
yes.
you see what I mean? And, it's this mysterious Facebook algorithm, which we have no idea. I mean, the whole world is about, the whole world of this media and reach and content is all about, how do you outperform, how do you skirt the edges? And that's what creates, the dilemmas of fake news and all this sort of stuff, because those are people who play the game of Facebook. And,
Okay.
we don't lie or anything, but, we've been known to, use things on the Facebook algorithm to our advantage, right? But
Right.
against you, and it's just not happening anymore. It's just like, oh, gosh, I'm kind of screwed. Yeah, it kind of sucks to that regard.
Okay. No. See, that's so this. See, the media and this whole media thing. I think a lot of things are going to happen in the media space. Okay. I don't know what it is because I'm not I don't know the domain very well, the whole media domain. I don't know how it's going to turn out, but I can see that eventually there will be a Google or the Facebook on the blockchain eventually. The social media will come on the blockchain.
Mm-hmm.
Not just about the money piece. So the ad piece, think about the advertiser right now, the major chunk goes to Facebook. It's not going to the guy who is seeing the ad, right?
Mm-hmm.
So it can end up that some guy builds a Facebook who will be paying the ad piece to the person who's seeing the ad from the publisher to the consumer rather than the middleman being there. It's very possible at this point,
Yeah. No, so there are definitely a lot of things. But hey, we've been on for almost an hour, so it's probably time to wrap up. Do you have any final words?
My whole thing to all the people out, try it out, okay? Go look into the space because at this point, it's not a fad anymore, okay? For the people who are out there who are not looking into it. And you don't have to be an investor. All I'm saying is be a technologist. Just go and code things, okay? If you're scared about investing, don't invest. Try to build the apps because a software engineer or a marketer or anybody in the space, there's a huge career path in front of you, okay? Means you can't find a technologist anymore. Pretty much, you cannot get somebody to code your project. There are multiple projects raising so much money. See, things that I would want people to look at is the data points. You have 2017, where all the VCs raised close to $600 million to fund various projects. ICOs raised $2.7 billion. 2018, it's only April, ICOs have already raised $4.5 billion.
Wow.
So many new projects are being funded. People all over the world are contributing. And when that is happening, you want to look into that space from a technology aspect of it. That money is coming into the technology, okay? And people are trying to build these things which they say that they're going to do, right? So you can be a technologist. And I tell the kids out there or anybody out there to look into this because this is the future, okay? No matter what the governments or everybody is trying to regulate it or not, this is the future. And this is meant for the guys who are scared to go into something that's very volatile, to look into it from an investment perspective, because it is volatile, no doubt about it. And you have to have that risk-taking mentality. See, I was a poker player before, so I can do it. I don't mind things. I was a trader before. Things go up, things go down. I am not attached to the price at this point. It doesn't matter to me what the price of this thing is. I am looking at it from how it's making our lives better, how I can transmit value over the internet. See, I can maybe now send my brother or my parents money in India using Bitcoin. Earlier, I couldn't do it over the weekend, as I said, or now Bitcoin carries a premium in many countries. So if I'd send them $1, they would get exactly only what the dollar was worth in rupees. Now, if I send them, they're getting an extra 20% because they have it in Bitcoin. So there is an arbitrage that happens. There's so many things that are happening around us in this world, you see?
Wow.
And different spaces, as I said, it could be in exchanges, it could be in entertainment. We're doing multiple projects across different, and we see different kinds of ideas coming from various people out here, you see? And the technology piece, like take Tezos right now, they are trying to solve, there are many new protocols that are coming. So you have to understand, Bitcoin or Ethereum could be that first car that was built in 1900. Imagine this is 1900, this is just the first car. The car is clunky. People are saying it's slow and stuff like that. My Visa will do 50,000 transactions per second. But if you're a merchant and if you take Visa, Visa pays you only 30 days after the swipe has happened, realistically. But if it's Bitcoin, in 10 minutes, you're getting your payment out there. So there are those angles to look into these things, okay? It's slower maybe, but that is a technology problem. It's like saying the first car was slower than a horse and the buggies were faster. That's a technology problem. Some guy who's like Einstein or some person like that will come and fix the technology issue, and we have to wait for the Ferrari to come, okay? Those fast cars have to come. It's not there yet. That doesn't mean the technology is bad. It's just that it's in the very nascent stage. It's the beginning of one of the greatest revolutions from a socio-political and economic perspective. And all I would tell people is get on board as quick as possible.
Great. Wow. Well, thank you again for your time.
Thank you so much. And so sorry about the interruptions, okay?
No, it's fine. It's fine. Everyone that's tuned in, we're with Nithin Eapen from Arcadia Ventures. If they want to learn more about what Arcadia does, do you guys have a website? Or?
Yes, arcadiacrypto.com, www.arcadia, ARCADIACRYPTO.com.
Wonderful. Great. Well, everyone, thanks for your time. Thanks for tuning in, and we shall hopefully see you guys soon. Alrighty. Thanks a lot, guys. Bye-bye.
Charles, quick question for you.
Okay, we're offline. Hold on.